What's up YouTube? Dougie Chong here. Welcome to today's video where I'll teach you everything you need to know about dividends. So, to start things off, what exactly is a dividend? Well, to put it simply, a dividend is when a company has extra earnings and they want to give back to the investors. So instead of reinvesting in their own company, they just give out the cash to the investors as a dividend. This dividend is typically paid on a quarterly basis. Some companies do it on an annual basis, and it's important to note that a company can withdraw their dividend at any time. Now, you might be wondering, why would anyone want to invest in a company when they do not even want to take their earnings and reinvest into the company themselves? Well, there are many reasons for this, but first and foremost is that they might have hit what's known as a sort of earnings wall, where the more money they put into the company, they do not expect to get that much extra profits in return. Therefore, instead of investing to get a little bit extra profit, they just give the money straight back to the investors. This typically happens in companies that are well established and have worked on their company for a long time. That is why dividends are thought of as a more safe option for long-term gains. A company that is just starting will want to pour all its earnings back into the company and grow as fast as it possibly can. Now that you know what a dividend is, I'm going to go over the three main things I look for when investing in dividend stocks. The first thing I look for is a good payout ratio. The second thing I look for is that the company pays the dividend on a consistent basis. And the third thing I look for is that the company's stock price grows as well as the dividend amount. I will now show an example using TD stock to illustrate these three principles. Here are some key metrics to the stock TD. As you can see, the payout ratio for this stock is 46.24%. The payout ratio is defined as the amount of dividends paid over the earnings. This metric shows a company's ability to pay the current dividend. If the ratio is at or close to 100%, it has a high chance of being cut since it will not be able to be covered by the company unless they increase their earnings. There are two different payout ratios shown on the screen here. One is for the previous 12 months of earnings, and the other is based on this year's estimates for the earnings. Another common metric that a lot of people look at is the dividend yield. As you can see here, the dividend yield is 3.93%. The dividend yield is defined as the annual dividends paid over the current stock price. A common beginner mistake is to just look for stocks with a high dividend yield. However, if their payout ratio is also high, they will not be able to cover the dividend and it will be cut in the future. This is why I value a good payout ratio as opposed to just a high dividend yield. Now I will move on to the second point of consistent dividend payments. As you can see from this chart, the company TD has consistently paid a dividend on a quarterly basis for the past 5 years. Not only have they consistently paid out their dividend, but they have also grown their dividend from 43 cents all the way to 74 cents today. Finally, the third thing I look for in a dividend stock is that the stock itself is also growing. From this chart, you can see a steady increase in the price over the past 5 years. Over the past 1 year, it looks rather stagnant, which means going forward, it may not be the best stock to buy. That's it for this video, guys. Hope you learned a lot about dividends. Please remember to subscribe, like, leave a comment in the sections below. What dividend stocks are you buying? Do you think TD is a good stock to buy? Let me know in the comments below.